Welcome to the deep dive. If you're like us, you want to get to grips with complex topics quickly and really understand them.
Definitely.
And today, we've got a really fascinating one. It's a proposal from a company called Fractal AI Technologies.
Yeah, and they're not pitching small fry, are they? We're
Yeah.
talking family offices, AI firms themselves, high-frequency traders.
Exactly, the proprietary trading shops, too. So our mission today, basically, let's try and distill the core ideas here and, figure out why this might actually be significant.
Right, and the foundation, it jumps right out. They're leaning heavily on fractal mathematics.
Uh-huh.
The work of Benoit Mandelbrot, the Nobel laureate, applying it to predict patterns in, well, foreign exchange FX and Bitcoin BTC.
Okay, fractals, like the classic coastline example, right? Looks jagged no matter how close you zoom in. Self-similar patterns.
Precisely that idea of repeating structures at different scales. And they're proposing that market movements might actually have this underlying fractal nature that maybe traditional linear models just miss.
So they're hunting for these hidden repeating structures, and the big claim, it sounds pretty bold.
It is. They're saying their AI can actually predict when these fractal patterns begin and when they end.
And they have these terms, green call and red put lines. What are those exactly?
Basically, yeah, predicted upper and lower price limits for the pattern.
Mm-hmm.
And they're claiming supposedly 90% accuracy within those bounds.
90%. Wow. Okay. How do they even spot these patterns starting?
Well, this is where it gets interesting, maybe a bit opaque. They talk about the appearance and then the change in big equal number.
Big equal numbers.
Yeah, sounds strange, I know. But the idea is these specific numbers repeat in that fractal self-similar way. What's really intriguing is they suggest the raw input data, the prices, can be all over the place, very dynamic.
Right.
But these output numbers, these repeating ones, supposedly stay stable while a pattern is active. It's the shift in those numbers that flags a change, apparently.
Okay, so stable repeating outputs signal a pattern, and a change signals the end, or a shift. You do wonder what market dynamics could cause that stability, right?
Exactly. And why would their disruption be predictive? That's a core question you'd want answered.
Now, adding some potential credibility here, their chief scientist, they have quite a background.
Seems so. Involved in writing the blueprint for Singapore as a financial center, apparently.
And got a scholarship directly from Lee Hsien Loong. That suggests, a serious understanding of finance and systems.
Absolutely. And there's a book mentioned written by this scientist called Predicting Jim Simons.
Jim Simons, the Renaissance technologies guy, the quant legend.
The very one. A phenomenal track record. And Fractal AI's stated goal is, well, to use their fractal math and AI to potentially match or even surpass those kinds of returns, especially, they say, as AI gets more powerful.
That is aiming high. They also mention a specific predictive window.
Yeah, 16 hours, covering the global market day, basically from New Zealand opening right through to the New York close.
And they think this points to some kind of structured, what do they call it, a linear pattern.
With market memory persistence. The idea seems to be that market behavior has echoes or connections across these time zones within that 16-hour period.
Interesting. So connecting the dots, they see a global interconnectedness their model can maybe capture.
It seems that way. And their initial focus, they say, is on US dollar and yen models.
Yeah.
Specifically for yen carry trades.
Right. Borrowing cheap yen to invest elsewhere for higher returns.
Exactly. Across different risk scenarios.
Yeah.
And they also claim this impacts major stocks, Tesla, Nvidia, Microsoft, Google, Amazon, Meta, and big ETFs like the QQQ and the S&P 500.
So it's a pretty wide net they're casting there.
It is. And it's not just about predicting markets now. They're looking for partners.
Partners for what?
To evolve their AI. They talk about going from Brain AI, which I guess is their current system, towards Brain AGI.
Artificial general intelligence.
Right. And then ultimately aiming for something they call Jim Simons ASI, artificial superintelligence, presumably focused on trading.
Wow. And the long-term target.
Get this, 66% annual returns, sustained over 33 years.
Okay. That's beyond ambitious.
It's astronomical, frankly.
Yeah.
But they do mention credentials. Being the first AI scientist funded by the Singapore government, a reported valuation of $20 million from Vertex Ventures, plus funding from Morningside Ventures. And they also cite past use by big banks, HSBC, UBS, BNP, even a past profit-sharing deal with BNP.
So some history there, some institutional touch points, though you'd want to know the details, obviously.
Absolutely. Specifics are key. but it suggests some level of, real-world testing or application in the past.
Okay, so to wrap up this deep dive for our listeners, we've looked at this fractal AI proposal, core idea, using fractal math and AI to predict market patterns with high accuracy.
Backed by a team with some notable credentials and very, very high ambitions, think Jim Simons level returns, or potentially even better.
Leveraging advanced AI, aiming for AGI and ASI in finance, with some claimed institutional validation in their past.
Which really brings us to the final thought, doesn't it? For you, the listener, to mull over.
Yeah. Given this massive ambition aiming to replicate or beat Jim Simons using fractals and AI in today's super competitive markets.
What do you think are the most critical factors? The things that will truly decide if a venture like this could actually succeed